Hi, Dave Feldberg, Coastal Real Estate Group. I'm here today with Beny Rabuchin with New American Funding. And the question I get pretty frequently, and I'd love to hear your response to this, is, so I hear the Fed is raising rates. Does that mean mortgage rates are going up?
I think I get that maybe as often as you do, maybe more. Yeah, so the answer to that is no. The Fed does not set mortgage interest rates. Mortgage interest rates are set by the US, our markets, our stock markets, mortgage-backed securities that are sold on Wall Street. Those are what set mortgage rates. The Fed sets their rates, which is the overnight lending rate that banks lend to each other, is the Fed. So that has no correlation with mortgage rates. With that said, the Fed can affect what mortgage rates do based on whatever their economic forecast is for the next year. So if they're talking about big stock market turn down or whatever the market change may be, or inflation or unemployment, those types of things funnel through Wall Street, which then could affect mortgage rates. So for example, in 2015, which was the first time the Fed had increased rates in 7 years, I believe, when they increased the federal funds rate by 0.25%, mortgage rates dropped by about 0.5%. So it did the exact opposite.
I remember that.
So when we hear in 2018 that they're going to move the Fed funds rate, a quarter, maybe 0.5%, doesn't necessarily mean that mortgage rates are going to move in the same fashion.
So probably keep an closer eye on the stock market and bond market.
That is the key that I look at to see what rates are going to do. Absolutely.
Cool. All right, good information. Thank you very much. Dave Feldberg, Coastal Real Estate Group. If you have any questions about federal funds rate or interest rates, please give us a call. We'll connect you with Beny. Thanks so much.